I just wanted to show you a quick illustration on checking account versus stocks versus real estate. And first off, let's talk about a checking account or your money in the bank. So here's your $1, and we're gonna put, let's say the bank pays you 1%. So here's 1% on $1, and that's linear wealth. Next, we're gonna talk about stocks. Money Magazine came out with an article. It was about a year ago. They said, what's better long term? Is it real estate or stocks? And they said it was stocks, and here's why they said it. They said minus some management fees, long term, stocks markets average about 8%. And so if we had, once again, your $1 asset, and now you're gonna make money at 8%. So here's my 8%. So you can see I'm doing a lot better than if I was doing the checking account, because now I'm making 8 to 1, so it's still linear wealth, 1 to 1. For real estate, they said long term it averaged 5%, and that was the nationwide. That was U.S. Real estate in California's 50-year average is 7.3%, but let's just use the nationwide 5% average. So in real estate, here's my $1 asset, and we're going to borrow $9 from the bank. So here is 9. So now I have a $10 asset. That's one. We're going to make money 5 different ways with real estate. So one is the leverage. Next, we are going to get a 5% return, just like Money Magazine said, and there is 10, 20, 30, 40, and 50. So you can already see how we're doing a lot better with this $10 asset, but we still have 3 other ways that we're making money. So we have cash flow. The renter, at the beginning, may not be a lot of cash flow, but it's going to be a little bit of cash flow, and rents tend to go up around 4.7%. So rents will keep on going higher and higher, but for right now, let's just use a little bit of cash flow. And then we also have tax benefits. For rental real estate, the IRS lets us depreciate it by 27.5 years. So for easy math, let's just use a house that's $550,000 divided by 27.5, and that's $20,000. So in real life, I could have a nice cash flow positive, but for tax purposes, maybe because that $20,000 deduction, I might be able to show a tax loss. So that's one of the beauties about real estate. So here's tax benefits, and then another benefit. So we've got appreciation, leverage, principal pay down, cash flow, and the last one is, let's see, leverage, appreciation, cash flow, tax benefits, and principal pay down. So let's say the tenant is paying down our mortgage, and so what's beautiful is if I borrow money, let's say I borrow $100,000 to invest in the stock market, well, of course, no one's going to pay back that $100,000. I have to pay it back. But with real estate, I can have that tenant pay it back. So as we get more and more cash flow, we can start paying down the principal and eroding at this loan as well. So the beautiful thing is even with real estate, you can see the scope of it all with the poker illustration, and just wanted to be helpful to you. If I can answer any questions to you about investing in real estate, I'd love to help, and you know how to get a hold of me. Thanks so much.